Hello everyone, I am Pratap here. We are at lesson 4, zone patterns and distal line placement. This lesson is having dependency on the previous lessons. In case if you did not complete the earlier lessons, please go to Neostock YouTube and click on this home page and then scroll down to supply demand zone price action course playlist and go through all the earlier lessons and then attend this session. So let's get into the session. Previously we discussed two types of leg candles. One is a drop, that is a bearish candle, and another one is a rally, that is a bullish candle. So I clearly told you we have to use the terms drop and rally instead of bearish candle and bullish candle. So we are having four types of zone patterns. And first one is drop base rally. In short, we call it as a DBR. Second one is rally base rally. This is also called as RBR. Third one is rally base drop. This is called as RBD. And the fourth one is drop base drop. This is also called as DBD. So let us look into all these patterns in detail in this video. The first one is a drop base rally. Please look into this diagram. We have a leg-in candle, which is a drop, and then we have base candles, and then we have leg out candle, which is a rally candle. That's why this pattern is named as drop base rally. Always remember, if your leg out is a rally candle, it is always indicates a demand zone. That's why this pattern is a demand zone. So this pattern confirms a demand zone, and this pattern indicates a reversal pattern. It indicates the reversal pattern. Why we are calling reversal pattern? Look into the leg-in. What kind of market it is? Bearish market. That means a down market. And then followed by base candles. Price moved in a narrow range. And then all of a sudden what happened? The market is changed to bullish market, that is up market. So down market is ended and then up market is started. That's why this pattern is called as a reversal pattern. So down market is reversed to the up market. So this is the first type of the pattern. And the second type of the pattern is rally base rally. So we have a leg-in as a rally candle followed by the base. After this base, we have leg out as a rally candle. So that is the reason why this pattern is named as rally base rally. So leg-in is rally and leg out is rally. That is leg-in, rally is leg-in, then base, and again leg out is again a rally. We already discussed. If the leg out is a rally, it always confirms a demand zone. So that's why this pattern confirms a demand zone. But what kind of pattern it is? Earlier one is reversal pattern, but this one is not reversal. Rally, base, again followed by rally. That's why this is called as continuation pattern. It indicates the continuation pattern. Earlier market is up market, and after the base again the up market is continued to up market. That's why it is called as continuation pattern. And the third type is rally base drop. So we have a leg-in as a rally candle, then followed by base. After this base, we have a drop candle, the leg out as a drop candle. So leg-in is the rally and leg out is the drop. If the leg out is the drop, that always confirms the supply zone. That's why this pattern confirms a supply zone. But what kind of what kind of pattern it is? It is a reversal pattern. Why it is a reversal? Earlier market is a up market. Rally candle indicates up market. And after that we have a base. Now all of a sudden market is changed to down. That's why this is called as a reversal pattern. Up market is changed to down market. Due to that reason, this pattern indicates the reversal pattern. And the fourth one is drop base drop. We have a leg-in as a drop candle followed by base candles. And then we have a leg out as a drop candle. So that means this is a drop, base, drop. So we already discussed any drop candle as a leg out is a supply zone. So this pattern confirms the supply zone. But what kind of pattern it is? Earlier we have seen a reversal pattern. But is it a reversal? No. It is a continuation pattern. Earlier market is down market. Then we have a base. The same down market again continued. Leg out is also a down market. That's why this pattern is called as continuation pattern. So these are the four patterns you will be seeing in demand and supply zone price action course. You will not be seeing any more patterns. Our entire course is depending on only these four patterns. If you do not understand or if you do not memorize, please repeat this video again and listen. It's worth listening second time to understand our future concepts. Now let us learn some important rules. They are very, very important. Why I am saying very, very important? In the coming sessions, you are going to learn about your entry, target, stop loss, all these concepts. The stop loss concept is having dependency on what we are going to learn from now on. So this is about distal line placement. You know what is a distal line? In the previous lesson we discussed proximal line, distal line. So for a demand zone, a distal line is a zone low, and for supply zone, a distal line is a zone high. Okay, now the first type, drop base rally. So because this is a rally candle, it indicates a demand zone. So distal line is always a zone low. So to define the zone low, we have some rules for the demand zone. Let us look into the rules. And these, whatever the rule I am specifying, that is only specific to drop base rally pattern. Next you will be seeing rally base rally pattern. and it will be having a different rule. So that's why I am clearly telling you whatever the rule I am showing here, that is applicable only for drop base rally pattern, not for the other patterns. And these rules are for defining the distal line placement. So what is that rule? Your distal line should be placed for the lowest of the leg-in, base candles and leg out. So whichever is having the lowest, that should be the distal line. Okay. Among all these 5 candles, which one is having the lowest? This is the candle, the base candle is having the lowest value. So your distal line should be here at this low. So let us draw the base. And this is the distal line. So among leg in, base and leg out, currently the base is having the lowest value. Okay, let us see one more example for the same drop base rally. In this example, let us apply this rule. Lowest of leg in, base and leg out. So among all these candles, which one is having the lowest? Your leg in is having the lowest. So that's why now you have to draw your zone something like this. Have you noticed the difference between this one and the earlier one? Earlier, this is the lowest. The base candle is having the lowest. But now all of a sudden, the rule is changed because the drop is having the lowest. That's why your distal line is lowest among these candles. Among these means leg in, base and leg out. The lowest of leg in, base and leg out. So in this example, we found leg in is having the lowest. Now let us look into one more example for the same drop base rally. So this is our third example for drop base rally pattern. Now among this leg in, base candles and leg out, which is having the lowest? Leg out is having the lowest. Now you draw the base. So now your distal line is the lowest of these candles. So you should remember this rule. It is very important because in the next session you are going to learn your entry, target and stop losses. So at that time, distal line plays the major role. If you mark your distal line in a wrong way, so your calculations will be changed. That's why you should be very careful. You must remember and memorize these rules. If you have any confusion, repeat the video. There is nothing wrong in repeating second time or even third time. But everything clearly I explained with these examples. You can refer them. Okay, now let us move on to the next pattern. What is next pattern? Rally base rally. So can we apply the same rules we discussed in the previous pattern? No, you cannot. Here the rules are different. So here the rule says the lowest among these base candles and leg out candle. Leg in candle should not be considered because this is a continuation pattern. So that is what I specified in this point. Lowest of base candles and leg out candle should be selected. I never mentioned about leg in this rule. But previous pattern, we have considered all the 3 types. But in this pattern, continuation pattern, we considered only base candles and leg out candle. So in this example, what is the lowest? Base candle is having the lowest. So this lowest is going to be our distal line. Let us look into one more example for the same rally base rally pattern. Okay, as per this rule, lowest of base candles and leg out candle. So which is having lowest? Is it base candles or is it leg out? So here leg out candle is having the lowest value. So now we draw our distal line from here. So let us draw the base and see the distal line. Now our distal line is based on the lowest of this leg out candle, because this is the lowest among the base candles and leg out candle. So this is about distal line placement for rally base rally pattern. Now let us look into the third type. What is the third type? Rally base drop. Now this is the supply zone. So rally base drop for a supply zone, your distal line is the highest of these candles. Which candles? Leg in candle, base candles and leg out candle, because this is a reversal pattern. See here, highest of leg in, base candles and leg out candle should be selected. So among all these three types, where the highest is there, this base candle is having the highest. So this is going to be our distal line. So this is the distal line. Let us look into the second example for the same rally base drop. In this example, let us apply this rule. Among all these three type of candles, which candle is having the highest? Your leg in candle is having the highest. So let us draw our zone. So this is going to be our distal line. Now let us see one more example in the same rally base drop type. So in this example, among leg in base candles and leg out candle, which is having the highest? This leg out is having the highest. So that should be our distal line. Let us draw the base. So this is the distal line. So this is about the third type, rally base drop. And let us see the next type, that is the fourth type. What is the drop base drop? It is a continuation pattern for supply zone. So what is the rule now? Is it same as the previous pattern? No. Previous pattern is a reversal pattern and this is a continuation pattern. In the continuation pattern, we never select leg in. We only look into base candles and leg out candle. So that is what I mentioned in this point. Highest of base candles and leg out candle should be selected. I never mentioned about leg in candle in this pattern. So you have to look into base candles and leg out candle. In this example, which is having the highest? This base candle is having the highest. So this is going to be the distal line. So this is the distal line. Let us look into one more example for the same drop base drop. So in this example, among base candles and leg out candle, which is having the highest? Leg out is having the highest value. That's why this is going to be the distal line. Let us draw the base having this distal line. In this example, the distal line is highest of this leg out candle. So these are the rules for all these four types of patterns for drawing the distal line. But have you noticed the proximal line? The proximal line, the rule remains same. It's not changed. None of these patterns affected the proximal line. So it's a very, very important topic, though it looks simple by looking to these diagrams, but you should memorize these rules. If you draw the distal line in a wrong way, instead of drawing this distal line here, if you draw from here, what happens? See the gap from here to here? Maybe in the coming days, the price will reverse and come back and reach this line. And then here there could be so many institutional pending orders that might be again pushing down. And if you consider this as a distal line, now price moved beyond this. It went up to this level and then reversed back. So what will happen? It will hit your stop loss. If the stop loss hit, you will exit from your trade. You will get losses. That you will understand in the next session. We will be discussing all these topics in detail in the next session, in the next video. So then you will understand the importance of all these rules. So in the next session, we discuss about how to trade by using demand zone and supply zone. What are all the rules? We will also be learning an important concept, proximal line placement. In this video, you have seen distal line placement. But proximal line placement is with respect to risk reward. So you get better clarity about these proximal line placement methods for both demand zone and supply zones. Based on that, your risk reward calculations will be there. And you will understand in a better way how to trade by using these zones in your next video. I hope the information in this video is helpful to you. If you have any questions or doubts, please put them in the comment section. I will try to answer all your questions. And let us all meet again in our next lesson. Thank you.